Have you ever found yourself wondering, just how much cash can I actually use in India without getting into trouble? It's a super common question, and man, it's a confusing topic, right? Well, in this explainer, we are going to cut right through all that noise. We'll give you the exact rules you need to know to stay on the right side of the law. Let's get into it.
Okay, let's kick things off with the absolute biggest question on everyone's mind. Is there a legal limit to the physical cash you can just have at your house? I know it's a source of a lot of stress for people, but you know what? The real answer might actually surprise you.
Believe it or not, according to the income tax rules, there is no limit. Seriously, you can keep 5 lakhs, 50 lakhs, whatever you want. But, and this is the most important but, you absolutely must be able to prove where that money came from. If the tax department ever comes knocking, you need the paperwork to show it's from your salary, or a property you sold, or your business profits. If you can't prove the source, that's when you have a problem.
To make this all crystal clear, we've broken it down into 5 key parts. We're going to start with how the government actually keeps tabs on cash. Then, we'll hit the most important rule for receiving money, a sneaky little trap of small loans, and some special rules just for business owners. And trust me, you want to stick around for the end, because we're going to wrap it all up with a simple checklist to keep you safe.
First up, let's get into the why. Why do these rules even exist? We all know cash is still king in so many parts of our economy. But to clamp down on black money, the government has built some pretty smart systems to keep a watchful eye on big cash transactions.
So how do they know? Well, it's not like someone is manually checking your account. It's all automated. Your bank is legally required to report large cash movements straight to the tax department. The magic numbers to remember? Anything over 10 lakh rupees in cash deposited or withdrawn from a savings account in 1 year. For a current account, that number jumps to 50 lakhs. The moment you cross these lines, a flag goes up and it shows up right there in your tax forms. The taxman already knows.
Okay, if you remember one thing from this entire explainer, make it this. This is the single most important rule for almost everyone. I like to call it the 2-lakh Lakshman Rekha. It's a line you simply do not cross when you're on the receiving end of cash.
This whole thing is covered by Section 269 ST of the Income Tax Act. And here's the twist that trips everyone up. The law doesn't penalize the person giving the cash, it penalizes the person receiving it. That's right. If you're the one taking the money, the buck stops with you.
So the rule kicks in under 3 very specific conditions. 1, you can't get 2 lakhs or more in cash from a single person in a single day. 2, you can't receive that amount for a single transaction. So splitting a 3 lakh payment over 2 days, nope, doesn't work. And 3, you can't get that much for a single event or occasion, like a wedding. Even if it comes from 10 different people, if it's all for that one event, it's a no-go.
So, where does this pop up in real life? Oh, all over the place. Selling your car, getting the final payment on a land deal, or if you're a jeweler selling an expensive necklace. It even applies to all those cash gifts you might collect at a wedding. And here's a pro tip. A bearer check, one that can be cashed by whoever holds it, is treated exactly the same as hard cash under this rule.
So, what happens if you break this rule? What's the damage? Well, the government wanted to send a very, very strong message. This isn't a small slap on the wrist. The penalty is one of the most severe in the entire tax code.
It is a 100% penalty. Let me say that again. 100%. If you receive 2.5 lakhs in cash for a single bill, the penalty that can be imposed on you is exactly 2.5 lakhs. It's a huge deterrent designed to stop unaccounted cash in its tracks.
All right, let's shift gears. Now we're going to look at a rule with a much, much lower limit, and it's one that catches so many people completely off guard. This is the tricky 20,000 rupee rule for loans and deposits. So, the law actually attacks this from 2 sides. Section 269 SS says you cannot accept a loan or a deposit in cash if it's 20,000 rupees or more. Then, Section 269T comes in and says you also cannot repay that same amount in cash. See what they did there? The government closed the loophole. It's banned on both ends of the transaction.
And look, this is not just about big official bank loans. This applies to any kind of loan. We're talking about that 30,000 rupees you lend to a friend, or that cash your cousin gave you as a short-term loan. If you accept it in cash or they repay you in cash, you could trigger that same 100% penalty. The only safe route is through a check or a bank transfer.
Okay, calling all the business owners, the freelancers, the entrepreneurs out there. This next part is just for you. There's another layer of rules you really need to know about, and these directly impact your profits and your taxes.
Here's the deal. Under Section 40A3, if you pay any single person more than 10,000 rupees in cash in a single day for a business expense, boom,
the tax department won't let you claim that payment as a deduction. So you pay a supplier $15,000 in cash? For tax purposes, it's like that expense never happened.
Now, pay really close attention here, because the consequence is different, and it's a bit sneaky. Breaking that two-lock rule we talked about, that's a direct hit, a 100% fine. But breaking this 10,000 rupee business rule is an indirect penalty. There's no fine, but because the expense is disallowed, your taxable profit goes up, which means you end up paying more income tax. It's a backdoor tax increase.
And it doesn't stop with just day-to-day expenses. This also applies to buying assets for your business. If you buy a laptop, some machinery, or even office furniture for more than 10,000 rupees in cash, you lose the right to claim depreciation on it for tax purposes. That can really add up over the years.
Wow, we have covered a lot of ground, haven't we? So, for this final section, let's boil it all down into a super simple, practical checklist. Think of this as your ultimate guide to handling cash the right way and staying out of trouble.
This table lays it all out perfectly. You can see the pattern, right? The highest limit, 2 lakh rupees, is for just receiving cash in general. But as soon as you get into specific things like loans or business payments, those limits drop way down to 20,000 and 10,000. And the consequences? They are always serious, either a massive direct penalty or a bigger tax bill.
So here's your final game plan. The main idea is simple. For anything significant, just use the banking system and always keep a record. The 3 numbers to burn into your brain are 2 lakh for receiving, 20,000 for loans, and 10,000 for business expenses. If you stick to that, you're going to be just fine.
And that's a wrap. We've gone through the rules, the penalties, and the best practices. So I'll leave you with one final question to think about. Now that you know all this, take an honest look at your own finances. Are your cash habits putting you at risk?